Here we are going to be treating double entry today. How to do the posting, how to identify the two accounts, and how to do the entries. If double entry has been giving you difficulty in posting, in understanding, just stay back and watch this video to the end. I will give you different examples in which you can use to solve this, and we're going to solve different examples together here. Now, double entry system. Now, know this, put this in mind. To every debit entry, there must be a corresponding credit entry. That is to say, to every question you are going to solve, you must open two accounts. For every debit, there must be a credit. For every D, there must be a C. For every debit, there must be a chairman. That is what this double entry principle is saying. For every debit entry, there must be credit. And now, when solving double entries question, please, I want you to bear one thing in mind. Put yourself as the owner of the business. When we start solving those questions, I'm going to tell you why. Put yourself as the owner of the business. Don't put yourself as a third party. Like, okay, you are helping A and B. You are the C. No. Put yourself as the A. Then you are preparing the account for B. That is when you will understand this better. And now we have two methods here. They say debit the receiver, credit the giver. Now, in this case, see yourself as the receiver and also see yourself as the giver, because as the owner of the company, you can receive and you can also give. So whenever you are receiving, that means somebody is giving you. And whenever you are giving, that means somebody is what? Whenever you are giving, that means somebody is receiving. I don't know if you're getting it. So just put yourself that you are the giver and the receiver. So whichever you are doing, know that the other person is receiving. Now, when you are receiving, Mr. B is giving you. That is why you are receiving. I don't know if you understand. You are receiving a car from Mr. B. Mr. B is giving you a car. That is why you are receiving. That is why we say for every debit, there must be a credit. Now, you can use this method to solve double entry. But you can also use this. This one make it more easier and explicit. Know that debit, credit, these drawings, expenses, and assets are originated from debit side. Now, debit is their origin. So whenever you are solving any question and you see drawing, expenses, assets, know that they are what? Debit balance. You don't need to think two times. When you see the purchase of office equipment, know that office equipment, they are assets. You debit the office. You debit your office equipment. You understand? Just know that drawing, expenses, and assets are what? Debit balance. And also know that liability, equity or capital, revenue or income are what? Credit balance. Put this in your head. Put it what? In your head, in your heart. Know it. Once you know this, then you understand that double entry system is very simple. We are going to be using this method and this method to solve questions that I have here. And we're going to solve them together and you will find out that double entry is very, very simple. Now, if you cannot remember this is the acronym DLR. DLR. D is for drawing, E is for expenses, A is for assets, L is for liability, E is for equity, R is for revenue. So just memorize this and get it, and you are done with the double entry system. You can solve any double entry you see anywhere, even when you are posting, because double entry system, double entry seems to be the I think the basis of account. Because if you don't know double entry system, what are you preparing? It's one of the bases. So we are going to solve questions now, practical questions now. We're going to solve them together. So stay back, let us solve number 1 question now. Yes, this is number 1 question. Number 1 question say, goods worth 100,000 was what? Was sold on credit on 1st January 2022 to a customer, James Limited. Now, we're going to use this method first. Goods worth 100,000 was sold on credit. I am the owner of the business. I am the one selling now. That is why I said, put yourself as the owner of the business. Goods worth 100,000 was sold on credit on 1st January 2022 to James Limited. We are selling to James Limited. So the two accounts there will be sales and James Limited. Now, we are putting James Limited because this goods is being sold on what? On credit. The reason is this: I sold these goods on credit to James Limited. I don't know James. You understand? So when I saw this good, I said, Mr. Man, what is your name? He said that his name is James. I said, okay, give me your phone number. I said, okay, where are you living? Who can I contact? Give me this. I gather his information because I sold these goods on credit to him. I wish I sold these goods on cash. When I say he pays me cash, I don't need his name. I don't need his phone number because I sold to him and he paid me. And that is all. But since this one is on credit, that is why we are putting down his name. Because it's our what? It's owing us now because we sold to him on credit. He's our debtor. Now, in this case now, who is giving and who is receiving? Now, see, goods worth 100,000 was sold on credit on 1st January to I am the one selling. To put yourself as the owner of the business. To customer, James Limited. I am what? Giving. And James is what? Receiving. So in this case now, we've identified the two accounts, sales account and James account. So you do it like this. James and sales. Debit, credit, debit, credit. They say on 1st 2022 says 100,000. First 2022 James 100,000. You are done with this. Now, this implies that we have made sales, but money has not entered. James is owing us. That is why we have to put James here. So these are the two accounts you created. You see how we identify the two accounts? Yes. Now, let us use this method. Let's use this method here. Sales is revenue. Are you getting it? Sales is what? Is revenue. And what can we see revenue? You credit it. Then you debit James. Mind you, James now is seen as our debtors. And what is debtor? They fall under assets, under our current assets. So when you know that, when you sell goods on credit to somebody, and when the person is owing you as a debtor, that person fall as an asset to you, but a current asset, then you will know that you automatically debit the person and credit sales. So that is that. Let us answer the second question so that you see another scenario. Hope you are getting it, or am I too fast? Now, this one says, goods worth 200,000 were sold on 15 January 2022 to a customer, John and Co. Immediately paid for the goods by cash. You see this one? This one now, we sold to John and Co. But he immediately did what? Paid by cash. Now, who is giving and who is receiving? I am selling, so I am giving. You understand? Who is receiving the goods? James is receiving the goods. You understand? Now, let's identify the two accounts. The two accounts here is going to be sales and cash. When you make sales, sales is going, cash is coming in. You understand? So with these two now, sales is giving, cash is receiving. You understand? How wish it is on, how the sales was on credit, then James, Mr. John, will be receiving. We are going to debit Mr. John. But since he paid by cash, we are going to debit cash and credit sales, because our sales, because the cash is increasing now. Our cash is what? Increasing. So the two accounts is cash account, sales account. On the 15th January 2022, how much was the money? 200,000. Says please. 200,000. Then 15th 1 2022 cash 200,000. Hope you understand this. Now, our cash, we receive cash because we made sales. We give out goods, and when you give out goods, you receive cash in return, and the cash is increasing our assets, while the stock, the goods that we have, is reducing, and that is why our sales is credited and our cash is debited. Now, let's watch here. Let's watch this. Cash is an asset, a current asset. So whenever you get the first one, you credit the second one, as long as you've identified the two accounts there. You understand? As long as you've identified the two accounts there. Once you identify, cash is a debit balance because it's an asset. Revenue, when you say you generate money, is credit. Those are their origins. So you debit and you credit, and that is all. You understand? Mind you, this one is on cash. That's why we are not putting the name of Mr. John, because he paid. While the previous one was on credit, and that's why we're putting Mr. James to remind us that he is what owing us. Now, let's go to the third question. We are going to solve question here so that whichever you see, you can what analyze it and solve it yourself. Now, goods were purchased for resale on credit costing one what 50,000 naira on 2nd January 2022 from Faith Limited. Now, goods were what purchased. Who purchased the goods? I purchased the goods. I say always put yourself as what? As the owner of the company. I purchased the goods. Who did you purchase the goods from? Faith Limited. Mind you, this goods was purchased on what? On credit. That's another thing. So purchased on credit. So what is the two accounts here? The two accounts here is purchases and Faith Limited. Why? We are recognizing Faith Limited because the goods was on credit. Whenever there is a credit sale to whomever is buying, to whomever is selling, that person becomes your one among the accounts you are going to open. This indicates you are just reminding yourself that you are owing this person or that the person is owing you. You understand? Now, we are purchasing from this person. That shows that we are what? Owing Faith, because this thing, the purchase was a what? On credit. Are you getting me? Good. Now, goods were purchased for resale on credit costing 1.5 on 2nd January 2022 from who? From Faith. Now, who is giving and who is receiving? From Faith. Resale on credit on 2nd January from Faith. That means Faith is giving us. Faith is giving. We are receiving. Faith is what? Giving. We are receiving. Because we collected from Faith. Faith is what? Faith is what? Giving. We are what? Receiving. Are you getting it? So the two accounts here we're going to open is this. Purchase account and what? Faith Limited account. Now, since we are the one receiving, we are going to debit purchase and credit the giver. And in this case, who is the giver? Faith is the giver. Now, you say, and what was the date? The date. Okay, 2nd January 2022. Faith. How much? 150,000. We purchase. Then you credit purchases. You credit first with purchase 150,000 naira. Now, this shows that you, me, as the owner of the business, I purchased these goods on credit from Faith. That is to say, I am now owing Faith. I am now owing Faith. If this happens to be on cash, Faith will not show here. The means at which we purchase it is what we show here, either cash or bank. But because it was on credit, that is what Faith is showing here. Now, mind you, whenever you are purchasing. Whether you're purchasing an asset or you are purchasing other that is things for office use, know that it's a debit balance. When you purchase an asset, you capitalize it. When you, like maybe when you purchase a car, you capitalize it to asset. When you purchase stationery, biro, this, you expense it. They are all what? Purchases. So that is another way you can know whatever you are purchasing, just know that that thing is coming what? To debit side. It's either you capitalize that thing or you expense it. Is that okay? Now, in this case, let us use this method to solve it now. Purchase. We have purchased. What did we purchase? Goods. Now we are stocking up our goods. We are increasing our stock. You understand? Good. From faith. Faith now is now our liability. Then here is the liability in the credit side, because we are now owing faith. Faith is now our liability. You understand? When we purchase, we are stocking up our goods. Are you getting me? So when you know all this, then you know that you are in line with double interest. It won't give you headache. I hope I'm making sense. I hope I'm making sense. So you can either use this method or the giver and the receiver. You understand? So this method is just for you to know liability. Faith is our liability. We credit faith. We purchase, fall under asset, stock. It's a current asset. It fall under asset. It will debit our purchases. You understand? Good. That is how we solve this one. This one is on credit. Now, let's do another of these that is on cash so that you see how it will go. Number 4 question. Are you with me? Just pay attention as we are moving. Goods costing 120. We are purchased from Bala on 3rd February 2022. The supply was paid immediately by check. Let's roll our 2 accounts. Now, goods costing 120, we are what? Purchase. The 2 account here is your purchase and check, because we paid immediately. We paid immediately. Though it was purchased from Bala, but we are not owing Bala. So the 2 account is this. Now, who is giving and who is receiving? Who is giving and who is receiving? Goods costing 120, we are purchased from this. Bala is giving, we are receiving. So we are going to debit our purchase, we credit what? Bank, because we paid by bank. So here we put purchase, credit debit, 3rd February. Bank 120. Here, bank. Purchasing 120. We have solved that. Now the reason is this: when you make purchase, money is leaving your bank. When you have cash on you and you make purchase, you are giving out cash. Cash is leaving. When you make purchase and you pay by check, the money in your bank is reducing. Your stock is increasing and the amount in your bank is reducing. Here, the giver is who? The giver is the bank, and who is receiving? Purchase is receiving. Bala is the giver, but because we paid by cash, we are not going to put Bala's name there again. We are putting what? Bank, because the money in our bank is reducing. Do you understand that? Now let's use this. When you are stocking up, when you purchase, your asset is increasing. You understand? Your asset what is increasing. Your asset is increasing. That is that about that. Your bank is reducing. The money in your bank is reducing. This purchase now, it seems as if you are making an expenses, but you are stocking up. Stock fall under what? Assets. You understand? So that is that. Whenever you identify their account, you debit it, then you credit the order. I told you the reason why we did not put Bala here is because we have paid by what? By check. We are not owing Bala. Now let's check another question. Sorry, it's like I'm taking much of your time, but just it's for clarity purpose. Now, Mr. Ojo started business with what? 40,000 naira cash. 40,000 naira cash. The two accounts there is capital and cash. That is the two accounts. Cash, when you start business with money, it is what called capital. You understand? When you start a business, the money used in starting a business is called capital. Now they say Mr. Ojo started business with 40,000 naira cash. So the two account there is capital and cash. Now, when you check here now, where is our capital? It's in credit side. Now, for our capital to be in the credit side, our cash has to come to the debit side. Why? Because when you pump money into a business, the cash increases because there is an external money coming into that business. People are investing into that business as their with capital, and the cash of the business is what is increasing. So in this case, and the cash happens to be an asset, a current asset, whereas the capital here, a credit balance. You understand? Now, when you know these two things, you don't need to stress yourself too much. You just take here. Sorry, this, you want to make it sequentially. Capital, cash. I always like putting my debit first before credit. Now, capital 40,000. Under capital, cash 40,000. In this case, you debit your cash and you credit your capital. Is that okay? You debit cash and you credit your capital. So whenever you cannot use this, if this one is confusing you, in this case now, the capital is giving and cash is receiving. So whenever you cannot use this and it's confusing you, you just check here, use this one to check the origin of the transaction. Where is cash? Cash is a debit balance. Where is capital? Capital is a credit balance. Then you post as long as you've identified the two accounts. Is that okay? So let's solve this. Paid 450 cash for rent. You're going to have two accounts also. Paid 450 cash for rent. We are paying 450 cash for rent. So what are the two accounts here? Is rent and cash. Now, who is paying, who is giving and who is receiving? I pay 450 for rent because of the building I am using. I paid 450 for rent. So I am what? Giving. While rent is what? Receiving. Now you debit your rent. Now this is the two accounts, rent and cash. Don't forget to always put this, and don't forget to always put date when you are solving. Now rent is receiving the cash that I'm giving because I'm paying this rent by what? By cash. Rent is receiving from cash. Now you debit your what? Your rent with cash. How much? 450. Then you credit rent 450. Now this